Good afternoon, Ken Jolliffe with BIS Commodities here in beautiful downtown Cedar Rapids on Friday afternoon, November 21st, and reviewing the week of the commodity trade for us here, looking at the corn market, down about 9 cents on the wheat market down about 13 cents, bean market's up about 16 cents on the week, and naturally all that was done today in the bean market. Summarizing this to a point, I think is maybe just as easy to go back and say, all right, where have we been over the past, say 6 weeks, with our grain trade. As we all know, when we take a look at the supply side numbers, nothing has really changed. We've got adequate supply of both corn and beans, and also of wheat, not only here in the United States but around the world. We've gone through the scenario of the tight soybean meal situation in the southeast part of the United States. That seems to be easing back a bit as transportation has loosened up some. Also seeing some cargoes being switched out of the U.S. ports down to South America for meal here over the last couple of weeks. And the other thing is we do see some other grains starting to move towards the United States. So all this is somewhat easing that side of the equation. What we've actually seen in the past 6 weeks is a total transformation and switching of ownership of this grain from the point to where towards the end of September, starting the first part of October, as we were still struggling somewhat to get the harvest up and going, the commercial at that particular time was long in his positions. We have seen a complete turnaround during this time frame now to where the funds covered all their short positions. Thus, we moved the grain market higher. We have the funds now long, extremely long in corn, about even to slightly long in the wheat, and long again in the beans. Commercial ownership is added, so the commercials are short this particular time. So as we come into a day like today, to where last night's trade was somewhat negative for most of the evening, and then we had the announcement of the Chinese economy slowing some. Thus, their central bank reduced their interest rate to spur the economy. The European economy is still slowing some. Thus, they are looking to do security purchases very similar to what we did here in the United States for a while. So we've switched the issue around as far as this money flow, but it's still basically cheap money flowing into the hands of the managed funds, and with that money they have continued to pour into the commodity trade that you and I are most interested in here at this particular time, and that's the corn and the beans, and to some point the wheat. As you look at the fundamental side of things here right now, harvest is mostly complete other than some areas in the very upper part of Wisconsin and Michigan to where the snowstorms went through. We're starting to see corn bases starting to firm back up here, particularly out here in Iowa. The processor, as the harvest is over with, is firming it back up to entice more of the movement, probably from the commercial's hands right now than maybe the actual farmer being willing to do anything. The river system is officially shut down, which is the earliest shutdown that I can remember in a long time with the cold weather we've had and the icing on the river. And that has caused some maneuvering of positions around by the commercials. Some of them along the river that may have had some ownership that they couldn't get it shipped down the Gulf has turned around now and have sold that ownership out to the ethanol plants or the processing plants, both corn and beans, during this time frame of this week. So export-wise, as we saw this week, corn exports were up some, still not to the point that you want to say that we have to do any changing of the demand number that the USDA showed us last week. Bean exports were down from the previous week. When you look at the previous 3 weeks, in that down more than half of what they've been running, and wheat exports continue to be on the lower side of things. Inspections were huge for beans this week. 114 million bushels of beans went out of the U.S. ports. We do look for that to begin to slow down, now as there's a huge shipment of beans headed towards China. Upwards of about 7 to 8 million metric tons are actually on the water, going that way. So their commitments will slow. Maybe we see the transformation there of gradual loading of corn and wheat, and less beans, even though I just said, that corn exports are nothing great at this particular time. Looking at world prices, we are somewhere between $70 and $90 a ton higher than the world in meal. We are $12 to $15 a ton higher than the world in corn. So thus, when you look at what's happening again today with the U.S. dollar moving to a contract high, again, this is a fundamental side of things, but you would think someplace down the road, that does come into play when you look at our exports. The cattle trade here today, and particularly the cattle on feed report here this afternoon, showed cattle on feed at 100%. They were looking for a 99.6 number. Placed at 99, looking for 95.3, and marketed at 92 versus 93.1. Looking at the numbers, one would think, if they remember these numbers come the opening of the trade on Monday morning, that would be somewhat biased to the bearish side of things. I still think it'll probably depend on what type of cash trade we see here even later this afternoon. We have heard of 172 being rejected down in the far southwest part of the country. So, it does show that maybe we are starting to start to build this cattle herd back up, from the drought years of 2012. Hog market this week down about $2 in the futures. We saw the demand back off a little bit this week. We've had a nice run in the hog market futures from about 86 up to 93. So a little bit of profit taking probably by the funds and the specs this week. So as we move into next week, of course it'll be the holiday week with Thanksgiving in the middle of it. The trade will probably volume-wise slow down some, through all that. It still appears that we're going to be totally focused on money flow, by the managed funds. We'll have to be interested in seeing what the world does as far as these interest rates. Now that we've seen the actual dropping of the rates in China, we see the easing continued in Europe, and of course earlier this week we had the announcement that Japan was actually in a recession. So when you look at that part of the world versus what we have done in the past in the United States, we have switched that completely around to where our QE is slowing here, but still picking up in other parts of the world. As I said earlier, it's all about money flow and how the managed funds want to use that money that's coming at them. So have yourself a safe weekend. We'll see you next week. Thank you.